Thanks for tuning into BQ Conversations. I'm your host, Niraj Shah. Our guest today is Mr. Sailesh Mehta of Deepak Fertilizers. Um, they've had a remarkable FY23. Um, be that as it may, while Q1 may have done what they've done, the idea of this conversation is try and understand from where Deepak Fertilizers and Petrochemicals ended in FY23. What does the management believe is in store over the course of the next 3 to 5 years? Mr. Mehta, good having you. Thank you so much for taking the time out.
Sure.
So,
Nice
Mr.
talking.
Mr. Sailesh Mehta, please tell me your FY23 performance was a landmark year for you. Now, based on what you did then, and despite the fact that Q1 might have been slightly rough, you've taken multiple initiatives, the results were rocking. How do you foresee or how do you intend to build out from there for FY24 as well as for the next few years?
Okay. So very broadly, let me share with you a little bit of the history and then come to the strategies that are at play. So as you know, Deepak Fertilizers have been in the chemical fertilizer business over the last 40 years. And initially, while we were inward looking, then on we have been looking at ourselves from the outside in, where we serve three critical sectors of the Indian economy. One is the fertilizer sector, agriculture sector. Second is mining chemicals, which go into mining of coal, limestone, cement, or infrastructure. And the third is industrial chemicals, which have some building block chemicals for specialty chemicals and so on and so forth. So I would say some 15, 20 years back, we, in place of a traditional organization structure, a functional structure reporting to me, we have turned it into SBU.
Sure.
And on that basis, we saw that, there was some very good traction that emerged. And I would say the bedrock of our strategy. So just to fast forward, basically, let's say a decade back when we looked at ourselves, that where do we go from here? We saw two aspects. One is from the outside in, we saw that we were beautifully aligned with the India growth story. All our three business lines were beautifully aligned with the India growth story. So as India grows, its need for food, and especially in terms of fruits and vegetables, the higher end of the food chain, would only grow. And that was very beautifully aligned with our crop nutrition, the fertilizer business. Secondly, as India grows, it needs coal for its energy needs. It will need cement for its, other real estate growth, and also a lot of infrastructure, bridges, dams, and things of that kind. And there, our technical ammonium nitrate, the mining chemical,
Sure.
was exceedingly well aligned to deliver that. And the third is as India, becomes I would say, good choice and a China plus one strategy for the global players, the industrial chemicals and specialty chemicals were seeing a lot of positive traction. So from the outside in, we saw this beautiful alignment with the India growth story. And from the inside out, we saw there was a phenomenal strength that we had developed over the last 40 years, right from raw material sourcing, inward logistics, manufacturing, safety, health, environment, outward logistics, customers, channel, regulatory framework, and so on and so forth. So now coming to where do we see ourselves and, going forward, what we saw was that these two dimensions we need to capture in our strategy. And that is something that has been at the bedrock of what we have been up to in the last 5 years and now next 5 years as we go forward. So there were, I would say, 4 mantras, if I might put it that way, that have been driving us. And part of it is already something that can be perceived, can be seen. And some part of it is in the making. So what we saw was that with this kind of an alignment with the India growth story, we said that, look, whatever we are doing, it makes obvious sense to do more of it.
Sure.
And so the first aspect we took up was to triple our fertilizer NPK capacity. And that is something that, I would say 5-6 years back we've taken up, and we are seeing the positive traction of that. So now, capacity-wise, we should be very shortly, in fact, with some debottlenecking, we should be touching 1 million tons. So that will make us a good player in the fertilizer sector, particularly in our core command geography, where from 3-4% market share that we had earlier, we will be somewhere touching 20%. So,
Sure.
Size, volume giving us that muscle power. We also saw in the acid business that there was a lot of demand, and I'll share with you one further expansion that we are thinking of. We have just recently announced.
Yeah.
But over the last 5 years, we added a complete new complex at Dahej. And this chemical nitric acid is a building block for all the specialty chemicals, which are having the positive traction from the China Plus One strategy. And then at that stage, we had also taken up adding one more complete complex for technical ammonium nitrate, the mining chemicals. And that is into an advanced stage in terms of project execution.
Mhm.
Now that, would put us very squarely among the top 3 in the world as far as technical ammonium nitrate goes, and for the mining sector. So the first mantra, do what you're doing well, do more of it, and tap into the India growth story. This has played out in a large way, and some balance, capex is still in the making. And with the size, one gets absolute muscle power in terms of raw material sourcing, in terms of channel, in terms of a variety of aspects that are there. So that's one mantra that is very strongly in the making. The second that we saw was, in order to bring solidity in what we're doing, that we said that let us backward integrate into our critical raw material. Now, all the 3 businesses are based on ammonia as their raw material. The fertilizer business, the technical ammonium nitrate, and the industrial chemicals. So the most obvious growth path, the growth mantra was backward integration into ammonia. And
which you've done.
Very recently, we have done that. We have announced the commissioning. But this is a world-scale, top class, technology-based ammonia plant. And what it has done is not only brought in a lot of, I would say, risk mitigation that otherwise we were facing from a viewpoint of lugging in that ammonia all the way from the Middle East, and then congestion at JNPT port, and then getting tanker by tanker into a Taloja complex. Now we are just across the current complex, and the ammonia will be piped. So besides the supply chain, vagaries that we'll be taking care of, we will of course be having a massive saving in the logistics cost, almost $70 to $80 per ton, in terms of the sea freight and then the road tanker movements. But besides that, the most important aspect is that we would be also making our strong contribution to reducing the carbon footprint.
Sure.
All these ocean going vessels that will get stopped.
Got it.
Almost 25,000-30,000 road tankers, which were otherwise to fly from JNPT to Taloja in a year. And there I would say the carbon would be at a human consumption level that will vanish.
Got it.
So from that viewpoint, that's something which we are looking forward to. And of course, it's a great import substitution product. So we'll be looking at almost 20,000 crore import substitution emerging in the next 10 years, emerging out of the ammonia plant.
Great.
So this was the second mantra. The mantra being, let us become solid in what we are doing. So, backward integrate into a critical raw material.
Sure.
So these 2 mantras have been based on capex, on projects, hardcore, solid projects.
Okay.
The 2 other strategies that have, are in the making, and some chunk, have delivered very good results, and some we are going to see in the next few years, are the 2 mantras are based on strategy. I would say the software. The other was the hardware, if I might put it that way.
Okay.
So on the software side, or on the strategic shift and the transformative strategic shift that we are thinking of, is in each of our 3 business lines, we are now very intensively looking at moving from commodity to specialty, or from product orientation to holistic solution. Or another way to describe it is a journey from customer to consumer. I'll just explain in terms of how it is playing out.
Sure, but we have 11 more minutes, Mr. Mehta. So I would urge you to kindly. I mean, I would love to hear everything, but let's just try and do it in a nutshell, please.
Sure. So this is the last and the most exciting part. So basically, just two quick examples. So in the fertilizer sector, while the typical structure of the industry is that you make a product like urea, DAP, NPK, SSP, or the like, give it to the dealers, and then your job is done. What we have done in a nutshell is that we have said that let us look at it from totally another perspective, and we have now looked at crop-specific fertilizers. So what does specifically sugarcane need? What does specifically cotton need? What does fruits and vegetables, what do they need in terms of the nutrient basket? So of course, NPK, the basic nutrients are required, but there are micronutrients and others that enhance the specific need for that crop. So from a pure product orientation, we are now looking at a holistic solution orientation. And unlike people in the industry, we have almost 300 agronomists working directly with farmers. So from customer, which is the dealer segment, to consumers, which is the farmer segment. So very intense involvement at the farmer level. Over the last 2 years, I think we have almost had 30,000-40,000 demo plots to show to the farmers the difference in terms of the productivity and yield. So this is one definite shift, transformative shift of that strategy from commodity to specialty. Similarly, we have tried in terms of the acid, instead of just pure commodity acid, we are looking at steel grade acid or solar grade acid. And again, very quickly to save on time, in case of technical ammonium nitrate, besides reaching out to all the end users with a high dense product, a low dense product, which is the world-class pills, ammonium nitrate melt, or even for the medical needs, hospital needs that are there, anesthesia. We have, catered to that. We are adding blasting services, drone-based management to move from product to impact at the mine, to improve the mine productivity.
Okay.
So that is the strategy. The last, of course, is how to, the last mantra is basically how to strengthen the internal systems and controls with the AI and IT-driven methodologies, smart factory, variety of customer-oriented data points and all.
Yeah, but I won't get into those details, please, because otherwise I'll miss out on a lot of other things that I want to ask Mr. Mehta, so you'll have to excuse me for that. Okay.
So this is broadly, I would say, the play that we are seeing in the next 5 years.
Yeah, and I wish you all the best for that. I have certain questions which I believe the street would want to know from your perspective as to how does that happen. So, for example, the backward integration and the ammonia plant at Taloja, 5 lakh MT per annum, etc. Now, your AGM speech, of course, shows that 85% is captive consumption. I would love to understand what is the benefit or the IRR on that plant with the spreads being where they are right now. Part 2 of my question, are the spreads contracted right now, and do you reckon at some point of time they normalize? And if so, how does it change the benefits or the IRR of this plant for you?
Sure. So as you would know that, it's every feedstock goes through certain cycles. So what we had done when we had, taken up this project is looked at a 7-year, 10-year average of spread between natural gas, which is the raw material, and ammonia prices. Now, as we are coming out of this COVID pendulum swing, which we have seen that, last year prices gone through the roof, now they are stabilizing. We are finding that for each of our raw material, there is a certain kind of coming back to a long-term average that is happening. And we are seeing this as we, are watching things month by month. And from that perspective, if one were to look at the long-term average, the ammonia project not only brings a huge degree of risk mitigation to the downstream, but it has very attractive returns. Now, those, of course, are linked to the spread between natural gas and ammonia prices. So what we have done is gradually we have looked at tying up natural gas linked to Brent or Henry Hub or the domestic gas that is there, and linking it in a fashion which also has certain correlation with the ammonia prices, so that it hedges the whole business as far as the margins go. And we have also looked at a 3-year kind of an tie-up and then a long-term tie-up, because what we were told was and what we were seeing in the marketplace, that for the initial 3 years there is a little bit of tightness on the gas availabilities and the pricing. Particularly, availability is not much of an issue as much as is the pricing. But post that, we were seeing, based on feedbacks from the marketplace, that things were emerging into an even keel. It's all linked to the demand supply of natural gas itself. So on that basis, we continue to very firmly believe that we should be looking at a long-term attractive return emerging out of the ammonia investment.
Okay, but there's no timeline or a number that you've zeroed down upon that you would expect that the IRRs would be X percentage, or you would expect that the payback would be within a particular period of time, because you could have imported this from elsewhere, independent of the carbon footprint, but at a particular cost you could have imported versus you're doing it yourself. Is there a time frame that you have in mind about when the payback would be done and over with, if you will?
What we are looking at is in the next year and a half, the price, that is the spread between gas and ammonia, should come back to the normalcy that is there. And then, depending on the swings, it could be somewhere in 3 years itself or 5 years itself that we expect that the project should pay back. But I'm hedging in terms of my answer only because there is these are commodity oriented aspects, both ammonia and natural gas. So from that perspective, one will need to go through the swings. But what we have is in the group a complete, I would say, risk mitigation, right from gas to the finished products, fertilizers and others. And so we have now a lot better capacity to absorb some of these swings. So from that viewpoint, it should remain a very attractive proposition in its totality.
Most certainly. And just inquisitive on those numbers. I'm sure you've done your homework before doing such a large capex any which ways. The other one, Mr. Mehta, is the TAN business, right? Now, I heard you mention about how large a player you become on the global front as a result of this. Tell us about some timelines about what does it do to the console ops of Deepak Fertilizers once this project is on stream. I reckon, 24 months from now?
Yes, roughly.
Okay. So what's the impact that it brings?
So again, if one were to look at continuing the positive margins that we have been seeing in the technical ammonium nitrate business, with the capacities that we already have, and also keeping in mind the growth that we are seeing in terms of the demand, whether it is coal mining or whether it's limestone or infrastructure or something, demand for the product is just not an issue at all, because it's beautifully aligned with that kind of a growth. And as far as margins goes, again, there it is interlinked with the ammonia pricing vis-a-vis the TAN, technical ammonium nitrate pricing. But there again, we are seeing that within a range, it should be fairly settling down in terms of a very attractive return. So that also something, while for me to pinpoint the figure would be speculative, but it is going to be something that will pan out. And if one were to guesstimate, one has to only look at the last 3 years of the excellent contributions that the TAN business has already made, and then project that for the future. That should not be a wrong direction that is there. So it's going to remain an attractive return.
I actually thought you would be a bit more optimistic by virtue of the size of the ops that you're putting up. The operating leverage could actually amplify that better performance.
So two aspects. One is the capacity kind of a thing. The second is what I mentioned to you, that we are moving away from product orientation to actually improving mine productivity. So the service aspect is also going to give a good premium. And that's also going to give us, of course, an entry barrier for competition. It's going to give us, a certain kind of bonding longevity. So those will certainly add to the premium.
Got it.
You're right.
Okay. Okay, I have 3 more minutes. I'll try and make it a bit of a rapid fire, Mr. Mehta. One, I haven't gone to nitric acid. Let me just quickly get that going as well, because there too, there is a significant development happening. My question was, would you look to remain a supplier to end chemical companies, the like of contract, I believe, that you've done with Aarti Group, for example, or would you look to enter into downstream products yourselves?
So we are right now we are seeing that yes, we are a good stable supplier to the specialty sector, but all strategic growth plans go, we are considering all aspects to look at what would make sense and what would further enhance our returns. So we are looking at all aspects.
Because I look at your speech and it mentioned that this forms the base for a lot of specialty products. So I was wondering if you ever have the game plan of moving into some of those yourselves. It could happen at some point of time, you're saying.
Sure. And otherwise, nitric acid also goes into the fertilizer business, moving more into specialty fertilizers. Of course, it's required for technical ammonium nitrate. Acids itself for solar grade, steel grade, and other, specialty grades could be there. And then the downstream itself. So we have a whole range of possibilities.
Can fertilizer look materially different 3 years out than what it has been for the last 10, 15 years?
For us, definitely, because this move from pure commodity NPKs to crop specific has been not only a massive transformation, but we are seeing a very positive traction emerging out of that. And farmers are now accepting that, they're getting value and they're ready to pay for it. So that's a very positive change.
Okay. We shall do a detailed chat at some point of time on that as well. I have 2 more questions, if you will. You've explained all the businesses very quickly in 60 seconds. So if you clocked in about, 19% odd Ebitda for FY23, but now you have full stream benefits of the ammonia backward integration coming in, supply, carbon footprint, so on and so forth. Do you reckon that there is a level at which Ebitda margins go up to, let's say, if not in the next 12 months, then over the next 2 years or 3 years?
Yeah, next 2 years, 3 years, certainly we are looking at, even conservative speaking, I'm sure it would be better, but from a conservative perspective, because, the margins otherwise, enjoyed by the global ammonia suppliers, now it is within the group.
So how much does it go up to, sir?
So again, putting a figure would always be speculative. Saying that, see the fundamentals, that otherwise, the ammonia business and the ammonia pricing would have, even if you look at the only raw material there, natural gas, and then the fixed cost. So beyond that is something that will sit as margins for the group.
But you do reckon that there will be upsides to what you've done in terms of 19% Ebitda for FY23 over the course of the next 2-3 years because of this project?
Yes.
And it won't be a meager 50-60 basis points. It could be higher.
Yeah, it could be. It will all depend on the spread.
Sure,
but,
I agree.
That is the obvious logic of putting up a backward integration into ammonia.
Exactly.
That's all.
Got it. One final question, 30-second answer, please. The street wants to know this because you've spoken, and I know it's difficult to do a land sale or a real estate sale very easily. But now it's been maybe 24 to 36 months that you've been talking about this Pune land sale. Is there a finite time by which you want to ensure that it gets done?
So see, as a trend, we non-core sold off the Desai Fruits shares. We sold off also excess land that we had at Dahej. We have sold off also now very recently excess land that we had at Vashi.
Okay.
And so the non-core, sale has been happening.
Of course.
And, we have been working at that strategy. Pune, we are looking at, somewhere getting the right kind of, I would say, customer, like kind of arrangement. And, that is something that is in the offing. And we are looking at various aspects. We didn't want to get into a distress mode. We wanted to avoid the COVID period impacts and things of that kind.
Makes sense.
So we said, let us wait for the right time so that, there could be a right valuation.
But no internal timeline by which you want to do it.
So now I think in the next year or so, it should be something that we should be able to, take very quick steps.
Got it. Mr. Mehta, lovely talking to you. Thank you for explaining such a complex business with such lucidity. Much appreciate your time.
Thank you. Pleasure.
Pleasure is ours, and viewers, thanks for tuning in.